This is a rather extraordinary development, Betty. It seems the Fed inadvertently sent the minutes and the economic projections out to members of Congress and some trade groups yesterday afternoon. It is possible that some people traded on this information. We just don't have enough details yet. Of course, the thing to keep in mind when reading these minutes is that this meeting was before the March payrolls report came out weaker than expected. But here's what they were thinking at the time. The economic situation had improved, the labor market was getting better, and they were beginning to discuss whether or not they should start tapering off their QE bond buying of mortgage-backed securities and Treasury securities. Here's a couple of key quotes from the minutes. Many participants, now this is the broader discussion, including some of those who were focused on the increasing risks, expressed the view that continued solid improvement in the labor market could prompt the committee to slow the pace of purchases beginning at some point over the next several meetings. All but a few participants thought that, given the current economic outlook, it would be appropriate for the committee to continue purchasing MBS and longer-term Treasury securities at about the current pace, at least through mid-year. That's the money quote for people in the markets. That before the March payrolls report came out, they were beginning to think about tapering it over the next several meetings, perhaps as early as the late June meeting. So we'll continue to look through these minutes. Again, they were released much earlier because they were inadvertently sent out to members of Congress and trade groups yesterday. So we've got the minutes now. We'll continue to look through them, Betty, and give you any more relevant information. But that's the key point at this point. It is possible that we're going to see tapering if we get back to stronger job growth earlier this year.
That is very interesting, Mike, and certainly something that the investors today will hone in on, which is this idea that QE may be pulled back possibly by, starting by the middle of this year. But Mike, I mean, do you think things might have changed, though, because this came out, of course, all before we had that jobs report?
Well, that's hard to say. And most of the Fed officials who have spoken since the job report say they're kind of looking past it because it could be just a one-off. It could be sort of noise in the sequence of numbers. They're going to want to see several months worth. Now, Dennis Lockhart from Atlanta, who spoke this morning, said he was disappointed in the numbers, and if that continued, he would even consider raising the amount of bond purchases. But most of the others seem to think at this point that tapering is on the menu, and we've heard it from people like Janet Yellen since this meeting, the vice chairman of the Fed. So it does look like this is something they're considering if we can see job growth bounce up again in the coming months.